My theory, or I guess the hypothesis I like to discuss with the panelists today, is that in my practice, being here in the Bay Area for many years, I'm more familiar with the M&A process by American companies. And what I see is that large American companies utilize the M&A and acquisition process in a way to in-source innovation. In other words, all the big tech companies here in the Bay Area, the reason why they acquire startups is mostly because they're interested in acquiring technologies or people who invent new things. So it's a true channel for bringing innovation inside big companies. But I don't know if that's the case also in Europe. My sense from working the space is that it's different. That European companies tend to do a lot of their R&D internally, and also the M&A avenue is not used to the same level as it's used here to innovate, but perhaps more to enter new markets or expand commercial in different segments. So with this hypothesis, I like to start asking some questions to our panelists and seeing what their perspective is. We have a different set of individuals here with different backgrounds and experiences. So we've got Gonzalo Romera Lobo from BBVA, who is based in New York, and is from a Spanish institution active in the US, and with much experience in cross-border technology transactions. We've got Tim Enger from Microsoft Ventures that is in charge for early stage investments with their group, a lot of accelerator type deals. Then we have Nicola de Cesare from Technogym, in charge of new technologies for the group, and is also joining us to give us a perspective of how European companies look at M&A as a way perhaps to acquire innovation, or maybe as a way to expand into new markets. And then we've got Peter Braun, who is an angel investor, and he's going to talk to us on how European angel investors look at opportunities and perhaps compare and contrast with the American approach. And then finally we've got Alex Lehmann from the London Stock Exchange, who's going to talk to us about the IPO window in Europe and how that is an avenue for liquidity for some technology companies. So without further ado, first question, I'd like to go around to all the panelists, and we can start from Tim maybe, and then go to everyone else. To my first point, is it true that large US companies primarily look at the M&A process as a way to acquire innovation from third parties? And if so, what is your experience also specifically in the accelerator world?
Absolutely. First and foremost, I want to ask the crowd here, who here has heard of a small startup company named Acompli? Raise your hand. Anybody? We have 2, maybe 3 people in the crowd, okay? What about Sunrise? Has anybody heard of Sunrise? We have maybe 10 people. So the reason I ask these questions is because, recently, if you look at what Microsoft has done, Microsoft has acquired Acompli, they've acquired Sunrise, they've acquired Wunderlist. And I guess before I get into my next point, I want to ask another question. Who here has heard of Outlook? Raise your hand. Okay, everybody's laughing. So I'm assuming almost everybody here has heard of Outlook. So the interesting thing about Outlook and the 2 startups that I mentioned, Acompli and Sunrise, is Acompli and Sunrise were both iOS, Android apps that were created to improve the email user experience and the calendaring user experience. And those 2 startups were acquired by Microsoft. Microsoft's pretty much skinned that technology and turned it into what is now the Outlook iOS and Android app. So if you look at how are startups disrupting large corporations, I think that's a great example. And I specifically work with the accelerator within Microsoft Ventures, and we are absolutely looking we're looking at the next group of companies that are going to disrupt large corporations. We feel like if we can get in front of it and work with them, it's going to be better for Microsoft and other large companies in general.
Thank you. Now, asking the same question to Peter from an early stage investor standpoint, Is this what you encounter also in the European market when you invest in startups? Is that the typical avenue that you're faced with? Their goal is to be acquired by large companies?
Yes, companies are being acquired, depending on which sector we're talking about. But typically, the valuations are way lower than we have it, for example, here. And you can almost say by a factor 10. So when we have a successful startup that is being exited in, say, Germany, and you have an 80 million valuation at the exit, that's what you have here invested by Microsoft in the A round. And that's the big, big difference. So I think a lot of what we've heard today and discussed today in Europe versus the US is actually driven by the exit valuation and the liquidity event. Because only when you have a good exit, you're making money along the way as an investor, and you can again invest. And we have seen a little bit of it in centers like London, obviously for a longer time, but recently also in Berlin and Germany, where successful founders are exiting successfully and then starting to bring money back into the ecosystem of startups. And that is something that needs to happen a lot more. Also, what we've heard today is the problems we still have in Europe to doing cross-border deals. Many of those companies are funded in a certain country and in that country alone, and only later on when they grow in other countries, say from Denmark into Germany, and then later on into the UK or so, we build a kind of European story, and then we become more attractive because companies in Europe are very often not bought for technology and to improve customer experience, but for market access. And that's quite a difference. So we try to help as EBAN, as a European business angel organization, have to educate both the founders, the business angels, but also the policymakers, how to better tie that together. But I'm stopping here.
No, you raise very good points. I like to pick up on two things you said. Number one, you talked about in the end about how you want to educate policymakers and big companies. And I think that's critical, especially on the big company part, because ultimately the big companies are the buyers of the startups. But also you spoke about the valuations being lower. And when you said that, I was wondering, why is that? I mean, is it maybe because the technologies are not so truly innovative? Maybe is that why the market is not valuing some of these companies that much? Or, maybe I can ask this question to Gonzalo, who is also an investor. When he sees deals from Europe, why are those deals priced much lower? Is it because of lack of innovation or because of lack of market opportunities, or what drives it?
I mean, from our perspective in the financial technology space, the US market is the core market for that type of innovation, of those types of companies. I'm not sure why the valuations in Europe are lower than in the US. Maybe there's more capital here to be invested, and that has a say in this question. There's more investors eager to put their money to work in some of the companies here, and maybe that offer and demand dynamic makes it more expensive here, or companies are more valued here. I don't know if you agree or not.
I think more capital is certainly a reason. The venture funds here are quite loaded, so typically they would not invest below 10 million, and they gain like 20% or so, a minority stake, and that makes an initial valuation of 50 million. That's just a relative simple math. If they would invest below, then the amount of work would be just too high. And that's one reason. But I think it's more a cultural setup and how we in Europe deal with risks versus chance. And the Americans, we heard today, are risk takers, but they're actually taking the chance that things will be successful and implemented in a positive way. In Europe, we very often have the not invented here syndrome. And today someone in an earlier panel said, it's not about the digital world. The whole world is digital. And I think that is a concept that is not arrived in many of the older organizations and the decision makers in those organizations. The digital compartments are still small, and suddenly they should be leading. And if you look at publishing houses or so on, they overslept that. Look at banks as the next thing, fintech. I mean, this is going to be the next victim of disruptive changes, but they're trying to not see that.
Mm-hmm.
It's also basic competition as well. I mean, I think if you have more access to capital, you can have more competition for investors to be looking for the better deals. And so if you have 5 really good deals and 100 investors, those valuations are going to go up because everybody wants a piece of that good company.
Yeah, no, I agree. I think personally, maybe it's a bit of a provocative, maybe it's not the right word, but my conclusion is still that ultimately the valuations are market driven, right? So what the buyers buy for startups is what determines then how much money investors are willing to pay in a round. And investors, even just because of maybe more money here, they're still very smart, so they're not just throwing money at startups. There might be a little bit of that, but ultimately it's really the fact that you have companies that innovate by acquiring outside. So, on this topic, I'd like to ask Nicola, since he comes from a Italian company that is in its own segment innovative, whether in your company there is that, that element there, whether most of the innovation is still happening internally, or is your company also acquiring teams or people, or considering bringing in innovation also from outside in order to catch up, or be always at the cusp of the market?
Yeah, I have to say that things are changing over time, not only in our company, but in Europe in general. I mean, up to now, we have been always at the edge of the innovation, but you can manage the innovation with your internal resources, with your R&D, and so on and so forth. But that's when innovation goes only along one line, like it would be product or channel. But when you are in front of such a disruptive innovation like digital that changed completely your business model, the way you face the customer, then we have realized that this is something we need to do. We cannot do internally because your organization doesn't allow such a drastic change. And so what we are trying to do, in line with what also Microsoft, of course, has done on much higher scale, is that we are looking for innovation outside. We are investing in startups right now. We are setting up, we have opened an office here in San Francisco to monitor the new trends. And we have launched an accelerator in Italy focused on our industry. We deal only with wellness, and all the startups that are dealing in that kind of space are in our radar. And we try to get the new idea, above all with people, because investing in startup and opening an accelerator, making hackathon for us is a way to get in touch with new people and with a creative mindset that is outside the normal way we look at things.
No, thank you very much. So we talked mostly about M&A as far as the innovation cycle. So I think it's a good topic to switch to Alex, who is our representative of the panel for a stock exchange, which is really a venue where companies are not acquired, but they get listed. So it's a different way to achieve liquidity for companies and their investors. So why? And the way it looks from us here is that in Europe, especially in London, the stock exchanges are very healthy and a very, relatively easy way for companies to achieve liquidity, as opposed to the U.S. markets, where the benchmarks are such that only a relatively small number of companies can go public. So is that true? What's the secret behind the success of the London Stock Exchange as an avenue for liquidity for European startups?
Sure, thanks. So I think it's a few things, frankly. I think one is we've really taken a focus on the SME marketplace. So we developed a marketplace called AIM, Alternative Investment Market, about 20 years ago. focused on companies kind of 0 to 100 million pounds in raise, call it 50 million US dollars to kind of 500 million US dollar market cap. That is a market that in the US is very niche, right? I mean, some biotech companies come public in that kind of market cap range, but there isn't a true liquid market in the States for such smaller businesses. So we've seen that be a real supplier of companies coming to market. And I should say that with this AIM marketplace, you've got a whole ecosystem of buy-side investors, both institutional and retail, the advisory community, the banks, the law firms, the accounting firms, and clearly LSEG, London Stock Exchange Group, who really focuses on that area. Perhaps an interesting, more recent development is we've put in place something called Elite. And Elite is something that started in Italy, and we've rolled it out to continental Europe now and the UK. And it's basically our stab, let's say, at a kind of incubation type business. Selfishly, it actually started in Italy because we were finding that the pipeline for AIM Italia companies to be a little bit weak. So we created, again, similar to many other incubation programs, we partnered with universities in Milan and other cities in Italy and the advisory community in other parts of Italy, some of the venture cap and growth equity firms in Italy. And we did that in 2011. We've subsequently rolled that out, that program, that Elite program out to pretty much every other country in Western continental Europe. And I would suspect that at some point you'll see us kind of franchise or roll out that model to other countries around the world.
Thank you. I know we are getting close to running out of time here, so I think we have a room just for a very quick last question that I'd like to ask each of you with very short answers. And I will. So the question is this: so we talked about M&A and IPO as ways to stimulate innovation for large companies or achieve liquidity for small and medium enterprises. We talked about how in the US big companies acquire startups to innovate. Maybe in Europe is a little different, but there are other ways for investors to achieve liquidity through IPOs. If you were on a panel speaking to a European government, what would be your recommendation to stimulate innovation through M&A in Europe? And I answer the question, as far as I'm concerned, I think it would be a matter of incentivizing large European companies to acquire startups so that the whole cycle can be jump-started. Gonzalo, what do you think?
No, I agree with that. I think there's also a need for a cultural change in the companies. So in the case of BBVA, I think that is obvious. The former head of digital banking is now the head of the organization, the CEO and president. And I think it's not only the regulation that has to change, but also the cultural aspect of the companies, trying to include acquisitions and investments in the venture capital as a way to innovate. Yeah.
Thank you. Nicola?
Yeah, I think that that's not something that goes only to the corporate. I mean, now we have a market that is driven by the corporate in Italy, but even in Europe. I think we should find a way from a regulatory perspective even to incentivize a venture capital market that is really lagging behind in Europe compared to what we see here. And so if there is a different way to exit both for the venture and the venture will pressure for having a market that gives them a return, and this would then create, as we said, a competition that gives value to the investor.
Okay, thank you. Tim?
Yeah, so if there was something that I would say to the European government, I believe is what you were asking, right?
Yeah.
I would help them understand that working with startups isn't always a quick ROI, especially with large companies, investors, especially government. If you want to have long-term success, there's going to be a period to where you're going to give a lot and you're not going to get anything in return. But if you do that, you'll be able to build out the companies and you'll be able to give them the support that they need to really get legs and to grow. That's what I would suggest.
Thank you, Peter.
Yeah, well, there's many long answers to that. So, but what I really like is there's a scheme of co-investment funds, for example, in Portugal, which turned out to be very successful. Basically, they're mirroring the investment of business angels, because the problem of the government is not the lack of money. There's a lot of capital, but how to deploy it successfully. And every startup, even if it fails, creates interesting jobs, provides for better education of the people, and we have to stimulate entrepreneurship in Europe a lot more. So everything that is helping that, encouraging young talents to not join necessarily the next Daimler or Volkswagen or I don't know, bank, but to really be encouraged to take whatever they learned at their university and build the next thing, or at least try it. That's very important. And by the way, your elite program, as far as I know, is a pre-IPO kind of situation, trying to help people to become, IPO ready. And I think that's a very good program, also stimulating M&A between those companies that are enlisted. I think that's what I really like. I just wanted you to mention that.
Thank you. So, Tim, Alex, your last words.
Sure, and just on that point on elite, so we have 270 companies in our different cohorts right now, and so we've actually only had about 10 IPOs from the 270, but we've actually had 50 M&A processes. So it's actually much more M&A and private funding related. I think from an LSEG perspective, we definitely think globally in terms of acquisitions. We bought the Russell Fund business here in the States. We acquired a software Sri Lankan business, Millennium IT. We acquired bonds.com here in the States. But I do think some other things we try to do, so we partner with a lot of sort of the government and closet government type organizations. In the States, I think a great example of that is something we do with an organization called UK Trade and Innovation, UKTI. And UKTI's mission in life is basically to encourage cross-border activity and job creation, UK and pretty much every other country in the world. They're extraordinarily active here in the States. They've got a big office in San Fran, and that, I think, specifically, tangibly, is something that we spend a lot of time trying to nurture that partnership.
So to help the deal flow.
Exactly.
Yeah. Okay, great. So thank you so much, gentlemen. It was a great panel. Honor to having you here today. And I think we're complete with the panel. Thank you. Thank you.
Thank you.